life insurance should you have? Making sure that you have the right financial resources in place, including life insurance, is important if you have loved ones who depend on your incomes. Life insurance helps cover funeral and burial expenses, pay off remaining debts, and making managing day-to-day living expenses less burdensome for those leave behind. Here's some how to find out if you need life insurance at all, or if you already have it, how to evaluate your coverage need and whether your policy is sufficient. Key takeaways: your financial and family insurance situations will determine whether you need life insurance, and if so, how much coverage you should have. The younger and healthier you are general, the less you will pay for premium, but other people can still get the insurance. It may be wise to carry as much as life insurance as you need to pay off your debt plus any interest, particularly if you have a mortgage or a co-signed student loans with someone else. Your policy's payout should be large enough to replace your incomes, plus a little more to hedge against the impact of inflation or purchasing power. There are several rules for thumbs using to compute the ideal amount of coverage. What is life insurance? Life insurance is an agreement in which an insurance company agrees to pay a specified amount after the death of an insured party, as long as the premium are paid and up to date. This amount is called a death benefits. Policies give insured people the insurance that their loved ones will have peace of mind and financial protection after their death. Life insurance falls into the two different categories, permanent and term. Permanent life insurance and policies do not have an expiration date, meaning you have covered for life as long as your premium are paid. Some permanent life insurance policies offer an investment components that allow you to build cash values, taking the premiums you pay and investing them into a market. Term life insurance, on the other hand, only covers you for a set term. Some policies allow you to renew your coverage after a certain expiration date, while others require a medical exam to do. Do you even need life insurance at all? Life insurance can be a helpful financial tool to have, but buying a policy doesn't make sense for everyone. If you are single and have no dependent, have beneficiary for your major assets, and process enough money to cover your debts as well as expenses related to death, your funeral estate settlement, attorney's fees, and others expenses, then you may all need life insurance. The same applies if you have dependent, but enough assets to provide for them after your death. But if you are the primary provider for your dependents, or you have significant amount of the debt that outweighs your assets, then insurance can help ensure your loved ones are well taken care of if something happens to you. Having a life insurance policy also could make sense if you own a business or you co-sign debts such as private students loans for which someone else could be held responsible if you pass away. What's the minimum amount of life insurance you need? A large part of choosing a life insurance policy is determining how much money your dependents will need. Choosing the face value, the amount that your policy pays if you die, depends on a few different factors. The minimum amount of the coverage you need may be very different from what someone else requires. Financial experts often recommended purchasing at least 10 times your annual incomes in coverage, although your personal numbers may be higher or lower. Here, some of the most important consideration of choosing a minimum amount of life debt. Life insurance can be used to pay off outstanding debts, including student loans, car loans, mortgage, credit cards, and the personal. If you have any of these debts, then your policy should include enough coverage to pay them off in full. So, if you have a $200,000 mortgage and $4,000 car loan, for instance, you need to at least $2,400,000 in your policies to cover your debits. You should take out a little more to settle any extra interest or large as well as